Good afternoon and welcome to Monday, October 27th, 2025 edition of Trading Trends ETF edition today. New all-time highs. Let's get right into the doc and focus on some violent movers to the upside, some to the downside. Looking at you precious metals. Let's take a look. So today, Biotech, Ethereum, and Mag 7 really run at least 1.5 standard deviations. It was really a gobble it up day in those areas. New 52-week high for Biotech. Ethereum, a huge move. We'll take a look at that chart. And the Mag 7, new all-time highs. Amazon, a monster run. And silver and gold continue to slide. It's been pretty violent. We said look out below. This got a little bit too hot. We'll take a look at the charts and see if it's setting up. And let's take a breath. New all-time highs for SPY, QQQ, equal weight RSP, which is a great way to confirm the breadth that's happening. It's all, every RSP is the equal weight to S&P, of course, and they had all-time highs, so it's not just a concentration. Breadth is really looking wonderful here. Tech, all-time highs. ETHA, the Europe story, all-time highs today. Industrials, semiconductors, the Dow, the Mag 7, and my favorite, the XLG, new all-time highs. Let's take a look first at your day chart, and we'll get into the tape, okay? So here we go. First, go into the dashboard panel, look at some individual big movers. Tesla, as we spoke about, up 4%, a huge run. We'll get into the indices, NVIDIA up almost 3%, AMD up 3%. There was more AI news this morning. Palantir, new all-time high for that company. We've been saying a lot of these stocks look absolutely tremendous. It's an own any and all assets market. Crypto, utilities, you name it, things are up and to the right. Apple up 2%, Microsoft up 1.5% into earnings over $530. Intel up 3%, unbelievable. Stock continues to look great. Amazon up 1.25% on their news that they're shedding 30,000 jobs starting tomorrow, about 10% of their workforce. Although I think it's up strictly the corporate side. Meta up 1.7%, and Robinhood up 4%, continuing to rip. And Broadcom adds 2%. So here, as we get into the intraday tape, look at this RSI, overbought since 4 a.m. We gapped up to 682. You remember where we were on Friday, about 678. There was positive China developments, trade news over the weekend. We gapped up and they bought it the entire day. Look at this, overbought all day. This was the opening bell. We held above VWAP, really not even a point in the day where there was weakness, a little bit of selling at 1 o'clock Eastern and a little bit at 2 o'clock, but rising VWAP, which is volume weighted average price, was 684. I am rounding for simplicity's sake, and we ended up closing at nearly 686, as we aforementioned last week. So we've been saying, due to our cycle work and just the current momentum of the market, we said the S&Ps want to put in, or SPY will speak about, we want to see 685, or we shall see 685 trade. I had it for a Halloween week. The date I have on my pad that we spoke about for a couple of weeks now is October 31st, November 3rd, on or around 685. Seeing as this here, so a little bit of danger, just not danger, but I want to see a little bit of caution here. We have a close above the Bollinger Band. We have not had that all year. You have to go back to November 8th of last year. And what happened? You get to Chembade and you get right back to the 21-day exponential moving average. Also point out there's also divergence here where we only reached 68 in the RSI. Don't love to see that. Can tell me that you could see a move to about 668, not immediately, but in the coming 1 to 2 weeks. So be careful chasing right here, but a great looking candle. It closed actually at the high, 685.80 here, and I'm seeing that's where we are. So again, another week or so of bullishness, maybe ending on around Friday. Again, 35%, or roughly a third of the S&P companies report this week. So a lot of examination will be done on these conference calls afterwards. In the coming, I have more so a date of around right before Thanksgiving, around November 20th, 17th, right around there, for us to go down to market continuing. Again, in terms of targets, 685 was my target. Due to this upper Bollinger Band close, I kind of want to stick to that. It's possibly they pull up to 690 just due to the bullishness here. So those are your risk levels. I see 5 points of upside in the following week, and downside, like I said, about 17 points. Not great odds in terms of chasing. We've been telling you since that bearish engulfing happened 2 weeks ago, was it one of the best things for the market? A beautiful washout here. And that was your signal to get in under 660. And this was our call. So as I said, just going ahead, 685 to 690 for ceiling. And then the next come down or digestion going into Thanksgiving, very likely, I think will take you to right around that 666 to 670 level. And that will still set up for more buying into Q4. I believe they will buy that there. Really not much else to say about the overall market. Let's get into the multiple standard deviation movers. Maybe this will shed a little bit more insight inside. I remember when this subsector was getting absolutely shellacked. It's the biotechs, absolutely risk on. And look at this. They've been standing room only to buy since October the 1st all the way to the 21st. So 3 weeks of strong momentum buying, and now pushing it up to 52-week highs today. You can't get much more risk on than that. And just focus up with the other two movers I'm going to follow up with in the gainers today. They're both total risk on. So nice money flow buy here. In terms of entry, you're better getting into this around 105, 106. So perhaps on some kind of volatility or catalyst right around, or, risk or a negative sentiment onto earnings. 106 would be a much better play. It's possible you get that in the next week. If you do, I would pounce on it. And in terms of the ceiling, right around here, 111. I personally don't want to chase this here. It is overbought, over 70 RSI, holding a registration here of 73. I just personally would not chase it here. 106 is much better for entry level. I would probably market continue to run. Biotech, you're going to get paid if you sell options. You could probably sell the 105 puts. You might be a little bit have a little bit of caution if we have a downturn in the next week or so. But I do think 105 puts, probably not the regular Novembers, but the week before regular November expiry would be good here. And that will probably pay you. But Biotech's new 52-week highs today. They're probably not bidding up the puts massively, but this is a total risk on product. So that's my call on Biotech. I think it has a nice 2 weeks of upside, but it may have to correct through price versus time. So meaning I like it for the next 2 weeks going higher, but it's tapping its head on the ceiling. Wait for some zigs and zags to digest here to 106. And then maybe 106, 111 call spread will also stand out if you don't want to sell the 105 puts. But a couple of derivative trades standing out there in the biotech sector. Number two, multiple standard deviation mover today. So they gobbled up the biotechs, totally risk on. The second thing they gobbled up is a little thing called Ethereum, and that was up 6 1/3% today. If you recall, this peaked back at the end of August. I'm looking at the ETHA, which is the Ishares Ethereum ETF, the most liquid for Ether, and it's up nearly 7% today. This peaked back on August 22nd at 36.80. Here we are at a critical time. The 200-day moving average is barely going up here, about a penny a day is ETHA. Let me pull this up here. Excuse me. So I like this here. The whole crypto complex has been a little bit slow to start here because I believe they're just really gobbling up the more AI spend, especially going into earnings. So people are gobbling up Tesla, investors gobbling up Micron, Intel, etc. You see the semis at all-time highs, while crypto is taking a little bit of a back step, as it usually does, a dip before a rip. I love ETHA here. Under 31, I think, is a very handsome setup. This chart, one thing constructively, or not so constructively, I should say, I don't like the lower lows here. This was a little bit scary here. September 25th, we touched 28.90, and then we got even lower October 17th, 28.06. I think that should hold, especially with your lower support of the 200-day moving average at 23 even. I don't think that 28 will go lower. Selling the 31 puts stands out to me, similar to what we said on the XBI. This is total risk on. You can do a 31.35 call spread going out for November, and this is Ethereum, so this will pay. It's high vol. Also, you could probably just sell the 30 puts and just do that 10 days out at a time. You can also sell the 15 Delta puts and just continue to roll. And they probably fund your account with a nice income stream leg. But this also, similar to what I said for biotech. So the market overall, in terms of macro, to me, what the charts are extremely clean looking, and usually that's when things are fulfilled, best to you guys is what I say. And you can tell me when I'm right, and I'll tell you when I'm right and when I'm wrong. Here, the crypto complex looks great. Rewarding entries are under 31 on ETHA, and I have a 35 half target for this, which is just inside of its all-time high struck at the end of August. And I think this will have a nice 2 weeks. This you could probably get in now. XBI, you have to wait a little bit, I would say, for like that $5 discount for a biotech. It's a little bit rich here and a little bit just short-term stretch in terms of price. Ethereum, if you can get 1% off, again, it ripped 7% today, and I still like the setup. But yeah, to me, 31, 35 call spreads just are kind of standing out. Maybe for December, also you could sell those, like I said, those 30 puts, and I think they'll pay you. I think Ethereum, it'll take 2 to 3 weeks, and I do think you'll come very, very close to new all-time highs in Ethereum. They gobbled it up today, like I said, up 7%. And then the third multiple standard deviation mover to the upside was the Mag 7. So it's really a beautiful thing. You have a lot of breadth. Communications looks great. That's somewhat resonant with tech. We also have utilities trading well. And of course, you have the Mag 7, very similar to SPY due to the concentration, all-time highs in terms of the concentration that we have in just a select names in SPY. But look at this. Looks like a little bit of a rug pull here. Very similar, like I said, in the S&P. You got new all-time highs here in the Mag 7. Beautiful rising 200-day moving average. This name, the Mag 7 complex, has not been in trouble since Cinco de Mayo week. Basically, right here, May 12th, there was no reason not to be in this name anymore. A little bit of a scare here, like I said, on that bearish engulfing on October 10th, but beautiful recovery. That's exactly what you want to see. Like when your star player has a fumble and then just like my boy Saquon last night ran a 70-yard touchdown out of the gate on the second play of the game. That's what this reminds me of here. A little bit of a falter and up and to the right. This will have I don't like the bearish divergence with just a 67 RSI recording. Don't forget, this was back at 72 RSI back in mid-September, and it held it there for about a week on large volume here, especially on that September 18th. It was a Fed day. This is getting a little bit close. I think this has a little bit of a short-term blow off top. You're kind of already seeing here with the upper Bollinger Band close. I think this maybe gets to top $68. And then in terms of downside, I think this does have a date with $64.5 to $65 over the next 2 to 3 weeks. So be careful with the setup going into the earnings. A lot of these Mag 7s are reporting this week. I'm looking at Microsoft and Amazon and the rest. So be careful with the setup. I think it just gets a little bit nosebleed territory at 68, and it looks like it wants to have a digestion down to $65. But again, Mag 7, new all-time highs today. They bid it up today, 2.5%. Let's look at what this is coming off of the back of. It has been a violent unwind in the precious metals. We've been talking about it. We said you're going to wake up, and it is going to be down 6, 7, 8%. Silver today down 3.5%. They're still not done, and I'm sure we'll be talking about this tomorrow on Spaces. So if you could join us at Chart Report Spaces tomorrow at 11 a.m. Silver, remember all the rage here. October 16th, this was 6 days after that huge SPY bearish engulfing pattern. Silver topped at 49.25, okay, on October 16th. And I do want to point out here in my notes that what we talked about that day. That day, we said this is a little bit stretched. Look for a move to the downside to $44. And off of 49, that is quite a move. You can check the tape. That's exactly what I said. And October 16th, what happened? It got to my line here. That cursor line over here is at $44 even. It got to exactly 3 days later. Now, I think we are going to base right here. I don't think we're going to visit for example, just here's a good example too. Today, the low was 41.70, and then they bid at 80 cents or 2% off of those lows. So this was, down 5.5% at one point. The RSI is the lowest. It ties the lowest it's been from this entire cycle since it's risen above the 200-day moving average 3 days after the SPY 52-week lows. So I don't think the story has changed. It is still a durable trend. I do think this is going to base this week, and if you do have an entry to be frank, under 44, I think, is a good level. So here at 42.5, I think is, I don't want to say an exceptional level because I still have a view that beta will run for a week or so. But just like we had before, the mags weren't trading so well. The metals were all the rage. And now you've seen this kind of go the other way. That's what we're seeing here. Trees don't grow to the sky. So that's what we're seeing here. I love the entry. If you were able to pick off and get it at $42 today, congratulations. I think that will be rewarding. The flows in silver have been absolutely great since May. I'm looking at that based on that 3 o'clock to 4 o'clock institutional hour. A lot of the candles have closed near the highs. They haven't been absolutely liquidated. And again, all the rage from Labor Day through October 17th was silver. It was absolutely the hottest, and the metals trade were the hottest games in town. I think this will base here sub $44, probably right around $44. They will bid this up soon and have it stabilize. And my target, it may be a little bit long and frustrating, especially if the reaction to earnings is very positive because they'll take their foot off the gas on metals trades like this. But I do still have a 48.5 targets, which is just inside of the highs struck on October 16th for the next 2 to 3 weeks. So again, that's a huge spot move to get back to $48, and we're at 42. That's $6. That is a big, big move. I like selling the 41 puts here. You could probably just roll that out and do it a week at a time. You can also, conversely, you can buy it's probably cheap too and borderline the gen play, but you can probably buy the 44, 48 call spreads as well. The SLV options are very cheap. You can almost even do a 1x2. This is totally, a long line, scenario. You want to see the metals trade when it gets back to this overbought. Once this picks up above 50 RSI, and that's going to equate with a close above $44, this will be the hottest thing again, and folks will want to get in this. This is an absolute superstar. This is Steph Curry just absolutely printing threes every day, every game. And then right here, he has 3 clunkers in a row of 6 points a game. Is his career over? No, you'd be a schmuck to think that. That's what I see with a rising 200-day moving average. Same thing as a professional like a Steph Curry. Let the chef cook, and the same thing with silver. This has had a dramatic fall. We're going to look at more metals, obviously correlated to this, but that's my call on silver. I think it's going to base here. Sub 44 spot entries will be rewarded, I believe, with a 48 entry. The story has not changed. They sold it out off today, down 3.5%. Look for this to start. Again, you want to see these, last thing on this, you want to see these candles get smaller. So down 8% 6 days ago. Then it had an up day. Today, down 3.5%. You want to see this almost get spliced and cut in half. You want to see it down 1.5% day, then a flat digestion day. It may be up flat or minus 20 bips, and then up 2% a day. And then you'll know, the line is getting attractive again, and they'll start bidding SLV. I think that happens somewhere this week or early next week. It's going to probably go with a little bit of a reversal in the market, and they say, I need more metals in my portfolio. Let's see what gold is telling us. They sold gold as well. The GLD got hit, of course, correlated with silver. Let's see if it was more dramatic. It's usually less dramatic. Folks love their gold. Silver is more spec. Down 2.8% is gold. We're coming off the all-time highs in GLD, $403, and then boom, right down to $367 today. GLD, similar forecast as we know. It is correlated. This has not been hit nearly as much in terms of percent loss off the highs. A marvelous year for gold. Better than silver. Silver, we were just talking about that 3 days in purgatory. No one even told gold. They bid gold up when SPY was tanking. I mean, it had a 2-day recovery and just off into the races. And then look at all this energy from April all the way to September. We were stuck between 300 and 320. Remind you of anyone? I'm looking at you, Bitcoin. And then boom, out to the races. People looking at M2 money supply. I think that will all be important. And you should focus on those charts today. Look at the RSI, still holding around, it's 49.9. We'll call it 50. Still 50 RSI going back to August 22nd. That's 9 weeks of at least 50 RSI, and it actually correlates with the breakout above 320 going back there. So again, for GLD, look for this to base sometime this week. I think under 370 will be rewarded. And today we're at 367. Does it plunge a little bit more like silver, closer to the 50-day in rally? The low today was 365, and they essentially closed it almost right at the lows. They actually bid up silver a little bit more, maybe part of the whole spec complex. There's a lot of interesting reads, especially the cool inflation reading on Friday took the juice a little bit out of this trade as well. But still, like I said, this is a durable trend. Nothing has changed. And my target for the next 2 to 3 weeks is not quite new all-time highs, but just inside that. I'm looking at 390. So basically 2 days removed from those highs. So again, under 370 again to 390, you could do a 370, 390 call spread. If that's a little bit wide and you just want to sell and have income, I do think selling the 360 puts will not, lose you any hair. I can speak from experience. I think that one kind of works here. So again, you sell puts, you do debit call spreads. These are basing this week. And again, correlated. What did they sell? Multiple standard deviation mover today, the gold miners. Of course, they sold GDXJ as well. We'll look at that later. These charts are very similar, so I don't want to beat it up too much. But GDX is your one of your year-over-year leaders. We highlighted it on Friday. This looks great. Be patient. Under 70. It's crazy. The 21-day exponential moving average on GDX here is 76. So you see just really a fall out of bed. The RSI here is 41, which is the low going back to New Year's Day, going back to the 52-week low of the gold miners. So it's pretty amazing. I do think it will stop there. I don't think you have a ton of risk here, especially at $70. The low today was 68.14, and they took it essentially to a 70 close. Again, this rubber band just got too stretched. This was overbought for nearly 2 months. So, of course, folks are going to take profits. The story has not changed. Not one close under the 200-day moving average since, about Martin Luther King Day back in January. So absolutely stupendous minimum 9-month track record on this. And I have a target of $84 on this in about 2 to 3 weeks. It first, of course, does have to close above $76. It might do that in one candle. It might do it in a couple of days. But look for this to gain traction. Like I said, end of the week, maybe into next week, and these will all go up or go down together. I'm looking at silver, gold, and gold miners. All right, so that was the big losers today. Let's look at the top 3 gainers of the past 5 days. There has been no better ETF in the past 5 days than USO, that is oil. Look where we are again, getting right to the 200-day moving average, which is sliding lower by about 2 cents a day. Oil, a tough trade. Every squirrel gets a nut. I believe in the energy trade is starting to come now. We're seeing Shell 52-week highs. Vale and Rio Tinto, they have some metals exposure, so it's not one for one. But you have seen definitely some strength in different caps from the explorers and the producers in the energy complex. USO, looking strictly at crude through USO, peaked on January 15th at 84.5. And this 200-day moving average has just been a brick wall at 73.35, call it. And it's really been difficult to eclipse and get above that. The RSI is above 50, but it's only been able to do that for about 3, maybe 5 sessions at a time ever since since August. So not amazing strength here. What do we see for the next 2 weeks, for example, for oil, specifically with USO? A little bit more upside. I think folks are going to be animal spirits bulled out, and I think that'll translate to oil. But here's the thing. I think we'll only get to about 75 to 75.5, right around here. So about another $2. It's been a tough trade. I do like that it stick the low here at about $67. And I think we actually talked about that on the show. We said it's going to be magnetized to the 200-day moving average and probably not much more. Also, just a little bit of bearishness. Don't love the lower highs here. And look at that rejection here on September 26th and then some. So again, my line here goes to about 75, top 75.5. And then that's where it'll end. So about another 5-7 days or so, it'll probably fool people into thinking, it's back, but it's not. And that's USO, though. It's had a great week. I will give it that. It's flowers. No better performing ETF in the past 5 days, up 7.5% for oil. Today, sideways, just down 10 bips. Nothing to it as they gobbled up, Ethereum, Mag 7, etc. But a really nice week for the past 5 days for USO, up nearly 8%. Number 2, we talked about this, but the second best performing ETF is Ethereum, ETHA, up 6% over the past 5 days. today, up 7, had some give and take. And here we are at 50 RSI. It would really be nice to see the fury and the velocity get back into this trade. We have not been above 50 RSI just a short while ago, 3 weeks ago, since October the 8th is when we were over 50 RSI in Ethereum, and they crowd into this. Once this gets, like I said, a close above 32, it'll likely accelerate higher. So look for this to base. I'm looking at 35.5 for a target in 2 to 3 weeks. And we already talked about the suggested call spreads for that. And then more spreading around. So it's oil that's dominating the past 5 days. Ethereum up 6%. And then South Korea up 4%. New highs here in South Korea. Not all-time highs. It's a catch-up trade going back to the COVID days of Jan 2021. It was $96 there. Look at this. Each candle representing a month. They love South Korea, especially since those April lows. This is having quite a moment. Major constituent in the South Korea is Samsung. So it's also obviously is exposed to technology. And look at these candles, absolutely massive. No sign of going down yet. Up 18% in June, up 11% in September and October, with 4 days ago, up 18%. Let me go back to a 1-year view. Beautiful chart, rising 200-day moving average. Really no danger for this chart going back to our Memorial Day when this was trading $58. Right here, because it's always nice to have diversification. You get a little oil, Ethereum, South Korea crushed it for the past week. I was talking about South Korea in a video about a week and a half ago. And it's continued to ramp up. I just don't want to chase it here. Again, a Bollinger Band close. It's had 3 of these in the past week and a half, which is really extraordinary. They are really standing in line. This is like Taylor Swift playing a small club show. They're really bidding up intense demand here, is what I'm trying to allude. And just be careful. To me, full target here is right around $90. So similar to what I see with silver, the charts look clean to me. This looks like it's going to peak soonish, maybe not today or tomorrow, because they close it at the highs. It probably gaps up tomorrow. But in the coming days, I do think you're going to have a move to 80. Sounds crazy to say, but $86, $87. Sounds drastic. You probably wake up and see, amazing, maybe a down move. But I think this come a little bit too far. The global bull market is on. I'm not arguing that. But it seems to me this trees don't grow to the sky, and this has to digest its gains a little bit, at least to $87. And that'll probably unfold over the next 2 to 3 weeks. I wouldn't sell outright calls right here just because of the candles are amazing. And it's up 2.5% today, which tells me it's still a stallion, not backing off yet. Once you see a little bit of digestion here, maybe a flattish day, and then you could see the move going down to about 86. But right here, it's the 3rd best performing ETF, up 4% over the past 5 days, accompanied with today's 2.5% gain after oil, Ethereum, and South Korea. So look out. In terms of trades, like I said, I don't really want to sell the 95 calls. Don't really want to buy the puts either. Probably sell a strangle. Maybe sell the 96, 86. There's a couple trades. I have to look at this one a little bit closer. Just overbought, and this is just going up and to the right. So you'd rather be long. Selling puts is a way to do that, especially if you think it's stretched. I would sell the 85 puts. Probably not going to get paid a ton, though. There are better trades than this. But South Korea, number 3 best ETF of the past week. And as we now look at just the 3 losers of the past 5 days before we wrap up, GDXJ, a lot of these charts we've already aforementioned, they are metals related. Just a dramatic unwind here in GDXJ, down 14% over the past 5 days, nearly 3% a day. It's doing that today. It lets me know that it's not quite done yet. GDXJ, I believe we were talking about this on the Friday video. This to me looks like an oversold buy. It's your top. There's moves today. It's either your number 1 or your number 2 mover because crypto ran. But this is still a year-over-year leader. Like I said, nothing has changed for this story. I kind of like the high volume here on October 21st. And you're getting a little bit of a hammer here as well. The low today was 88.67. They took it up above VWAP. So that could be it right here in GDXJ. This is a absolute superstar ETF. It combines the risk on equity aspect So what the miners are reading into, and of course the correlation as well with gold. So I think it's one of the perfect trades out there, which is why it is your year-over-year leader or top two. Entries under 88 is an absolute gift. I can't believe, what was the low today? 88.67. Yeah, that's a gift. That was almost like a fat finger or an error. I can't believe that. To be frank, I think under $97 is a great entry. And my target for this is right around 110, just inside of the 52-week highs. So that's a monster move. You can just do the common stock if you'd like, because it's so much in absolute terms to make up. You could also just buy the calls, just buy the 95 calls. There are a couple trades here abound, and also if there's any kind of risk, I would just sell the 90 puts as well. So GDXJ, a lot of trades standing out and all different ways to get long, an absolutely great name. And I do think this is an oversold buy today, and the hammer could be showing that to you. All right, so GDXJ, the worst week, the best winner year over year is having its worst week. That's what you want to see. That's like we said, Curry having a 2-point game, and you're able to get him for cheap. Do that. All right, the next one is silver, not as dramatic, down 11% over the past 5 days. We already talked about this trend still in place. Look for this to base. You don't need all these trades. You don't need to get long GDXJ, short silver, or long silver and long gold. We're talking about setups, best relative value. Yeah, here under $44, I like silver, and I usually don't love silver, but chart is the chart. And I still have a 48.5 target on this. Call spreads, I think, are the way. And then the number 3, so silver down 11%, and then gold, the third worst performer, down 8.5%. So you got the gold miners, juniors, down 14% in the past 5 days, silver down 11%, and then gold down just about 8.5%. So the best trades of the past 5 days, we're at all-time highs in the market. The best 3 trades in absolute terms are short GDXJ, short silver, and short gold. Do you need all of them? No. And that's great to understand when things get too stretched. It's a great way to diversify your portfolio through different strategies, different exposures of different assets, while you can also just buy Mag 7, but this also gives you different exposures across the board, which is necessary. I think these are setting up very, very soon. We will be back on Wednesday with our stock edition. Peace.